Economic recovery trends, insights into the growth of the digital services sector. Date, January 24, 2025. Events summary. A significant majority of analysts, approximately 60%, are predicting robust growth in the digital services sector by mid-2026. This forecast is backed by reputable sources such as Gartner and J.P. Morgan, highlighting key factors that are expected to drive this expansion amid ongoing economic challenges. Overview of the digital services growth forecast. The digital services sector is poised for significant expansion, primarily due to an increasing reliance on IT solutions across various industries. Analysts have noted that the current economic landscape, characterized by macroeconomic volatility and geopolitical uncertainties, has not deterred businesses from investing in digital transformation initiatives. Instead, it appears to have accelerated the need for innovative technologies that enhance operational efficiency and customer engagement. Key predictions and findings. 1. Increased IT spending. According to Gartner's recent forecast, global IT spending is expected to grow by 9.8% in 2025. This represents a marked increase in investment, primarily driven by companies' ongoing digital transformation efforts. As organizations strive to adapt to new technologies and evolving consumer behaviors, IT solutions are becoming essential components of their operational strategies. 2. Resilience amid economic challenges. J.P. Morgan's Market Outlook 2025 report discusses the resilience of certain sectors, particularly digital services. Despite a backdrop of policy uncertainties and geopolitical tensions, businesses are increasingly prioritizing technology investments. This trend is indicative of a broader strategy to navigate economic challenges by enhancing digital capabilities. 3. Analyst consensus on growth. A substantial majority of analysts, 60%, are in agreement regarding the optimistic outlook for the digital services sector. This consensus underscores the belief that despite external pressures, the sector has significant growth potential as organizations continue to seek innovative solutions. Detailed insights from key sources. Source 1: Gartner's forecast on IT spending. Gartner's report emphasizes the critical role that digital services will play in the overall increase in IT spending. The anticipated growth reflects the urgency with which companies are embracing technological change, ensuring they remain competitive in a rapidly evolving marketplace. The focus on digital solutions is not just about keeping pace but also about leveraging technology for strategic advantage. Source 2: J.P. Morgan's Market Outlook. J.P. Morgan provides a broader context for understanding the economic landscape as it relates to the digital services sector. Their analysis looks beyond mere spending figures to consider how the interplay of global events influences market behavior. The report suggests that as businesses confront uncertainties, they are turning to digital services not only for immediate solutions but also for long-term strategic positioning. Comparative analysis of sources. While both Gartner and J.P. Morgan present optimistic forecasts for the digital services sector, they approach the topic from different angles. Gartner focuses specifically on IT spending metrics and the direct impact of technological investments on business operations. J.P. Morgan offers a more comprehensive analysis that includes the economic environment, market dynamics, and potential risks, providing a holistic view of how digital services fit into the broader market context. This divergence highlights the multifaceted nature of the digital services sector's growth prospects, suggesting that while financial investments are critical, the underlying economic conditions also play a significant role in shaping outcomes. Timeline of key events leading to the current forecast. 2024, analysts begin to observe early signs of increased investment in digital services as companies accelerate their digital transformation initiatives. January 2025, Gartner releases its forecast predicting a 9.8% increase in IT spending for 2025, reinforcing the belief in the sector's growth potential. December 2024, JP Morgan publishes its Market Outlook 2025 detailing the resilience of the digital services sector amidst ongoing geopolitical and economic challenges. Conclusion: the forecast for the digital services sector is decidedly optimistic, with a strong consensus among analysts regarding its growth potential by mid-2026. As organizations continue to invest in digital transformation initiatives, the demand for IT solutions is expected to rise significantly. Despite the prevailing uncertainties in the global economy, the digital services sector is well positioned to thrive, driven by the necessity for innovation and efficiency. The insights from Gartner and JP Morgan underscore the importance of this sector in navigating both current challenges and future opportunities. As we move forward, monitoring these trends will be crucial for stakeholders across various industries seeking to understand the implications of digital service growth on their business strategies. The content discusses the economic recovery trends, particularly focusing on the digital services sector, with a notable prediction that 60% of analysts expect growth in this area by mid-2026. This is based on insights from credible sources like Gartner and JP Morgan, which provide a nuanced understanding of the market dynamics at play. Counterintuitive information. 1. Growth amid economic uncertainty. One of the most counterintuitive aspects of the forecast is the idea that the digital services sector will thrive despite the prevailing geopolitical tensions and macroeconomic volatility. Typically, one would expect sectors to contract during times of uncertainty. However, the digital services sector is predicted to flourish as companies prioritize technology investments to navigate these challenges. 2. Increased IT spending as a response to crisis. It may seem illogical that in the face of economic challenges, companies would increase their spending on IT rather than cut costs. However, the report highlights that organizations are actually ramping up IT spending to enhance efficiency and customer engagement, suggesting that during tougher times, businesses may view technology as a critical investment rather than an expense. 3. Analysts' consensus. Despite divergence in sectors, the general consensus among analysts, 60% predicting growth, contrasts with the usual market behavior where fragmented opinions often lead to mixed forecasts. The level of agreement on the positive outlook for digital services suggests a strong belief in its resilience and potential, which is not commonly seen in other sectors facing similar uncertainties. 4. Transformational investment as a necessity. The idea that digital transformation is not just an option but a necessity for survival and competitiveness is a significant shift from traditional business strategies. Companies are increasingly recognizing that failing to invest in digital capabilities could lead to obsolescence, which is a departure from the previous mindset where such investments were often seen as optional enhancements. 5. Long-term versus short-term focus. While many sectors may focus on immediate recovery strategies, the digital services sector seems to have a longer-term outlook. The forecast suggests that investments made today are not just for immediate gains but are viewed as foundational for future growth and adaptation to evolving market conditions. In conclusion, the predictions surrounding the digital services sector highlight several counterintuitive trends that challenge traditional economic recovery narratives. The sector's anticipated growth amidst uncertainty, increased IT spending as a strategic necessity, and a strong analyst consensus reflect a significant shift in how businesses approach technology and innovation in the face of challenges. The report on expert predictions concerning economic recovery trends highlights a significant forecast for the digital services sector, where approximately 60% of analysts anticipate growth by mid-2026. While the core narrative may seem straightforward, there are nuanced insights and details within the report that many may overlook, which carry substantial significance for stakeholders across various industries. Here are the key overlooked content and their implications. 1. Sector-specific growth drivers. While it is mentioned that the digital services sector is poised for growth, the specific catalysts driving this trend are sometimes diluted in broader discussions. The report implies that the increasing demand for IT solutions across multiple industries is a primary driver. However, the significance of this point lies in recognizing which industries are leading this demand, namely healthcare, finance, and retail. Significance: understanding which sectors are fueling this growth can help investors and businesses strategically position themselves to capitalize on emerging opportunities. For instance, healthcare's pivot towards telehealth and digital patient management solutions presents a ripe area for investment and innovation. 2. Quantitative forecasts and projections. The mention of Gartner's prediction of a 9.8% increase in worldwide IT spending in 2025 may be overlooked as just another statistic. However, the importance of this figure lies in its implications for budget allocations, workforce demands, and technological advancements. Significance: this growth forecast indicates that organizations will likely increase their IT budgets, leading to a higher demand for skilled professionals in tech roles. Companies that proactively train their workforce or invest in talent acquisition will be better positioned to thrive in this competitive landscape. 3. Resilience amid economic challenges. The report emphasizes resilience in the digital services sector despite geopolitical tensions and macroeconomic volatility. While many focus on the negative impacts of such uncertainties, the ability of the digital services sector to thrive is a crucial point that warrants deeper exploration. Significance: the resilience of this sector suggests that businesses are increasingly viewing digital transformation not merely as an option but as a necessity for survival. Organizations that embrace this mindset can leverage technology to mitigate risks and enhance adaptability, leading to long-term sustainability even in turbulent times. 4. Analyst consensus. The report notes that 60% of analysts share a positive outlook on the digital services sector. However, the weight of this consensus can be understated. The fact that a majority of analysts are aligned on this outlook can serve as a powerful indicator for market sentiment. Significance: this consensus can influence investment decisions and market behaviors. Stakeholders, including investors and corporate executives, often rely on analyst forecasts to make informed decisions. A strong consensus can lead to increased investor confidence and potentially drive up stock prices in companies within the digital services space. 5. Differences between sources. The distinction between Gartner's focus on IT spending and J.P. Morgan's broader economic analysis is a crucial aspect often overlooked. Gartner's insights are vital for understanding specific technology trends, while J.P. Morgan provides context about the overall economic environment. Significance: for companies operating within the digital services sector, aligning their strategies with both the granular IT spending forecasts and the broader economic indicators can provide a comprehensive view that aids in strategic planning. Businesses can remain agile by understanding both the micro and macroeconomic factors at play. 6. Implications for policy and regulation. The report briefly mentions policy uncertainties but does not delve into what these uncertainties could mean for the digital services sector. Policymaking, especially regarding data privacy, cybersecurity, and digital infrastructure funding, is critical for shaping the landscape in which digital services operate. Significance: stakeholders must pay close attention to regulatory trends as they can significantly impact operational costs and compliance requirements. Companies that proactively engage with policymakers or adapt to regulatory changes will likely gain a competitive advantage. 7. Emerging technologies and innovations. The report implicitly points to ongoing digital transformation initiatives but fails to explicitly mention which emerging technologies are driving this transformation, such as AI, cloud computing, and IoT. Significance: understanding which technologies are on the rise can help businesses make informed decisions about where to invest in R&D and innovation. This proactive approach can lead to the development of new products and services that meet evolving consumer needs. 8. Long-term implications for workforce and skills. The projected growth in digital services is likely to lead to changes in workforce dynamics, yet this aspect might not receive adequate attention. As companies ramp up digital initiatives, they will require a workforce equipped with new skills. Significance: a shift in workforce demands will necessitate significant investment in training and development. Organizations that anticipate these changes and invest in upskilling their employees will benefit from a more capable workforce and improved employee retention. Conclusion: the report's insights into the anticipated growth of the digital services sector by mid-2026 present a wealth of opportunities for stakeholders. However, recognizing the nuanced factors such as specific industry drivers, the significance of analyst consensus, the resilience amid economic challenges, and the implications of regulatory changes can provide a more comprehensive understanding of the landscape. For businesses and investors alike, these overlooked details can inform strategic decisions that capitalize on the impending growth within the digital services sector. 1. Increased IT spending. Analysts, including those from Gartner, predict a significant rise in IT spending, projecting a 9.8% growth in worldwide IT expenditures by 2025. This increase highlights the prioritization of digital transformation initiatives across organizations, leading to enhanced investments in digital services. This trend emphasizes the critical role that technology plays in driving business efficiency and adapting to evolving consumer behaviors. 2. Resilience amid challenges. Despite ongoing geopolitical tensions, macroeconomic volatility, and policy uncertainties, the digital services sector is expected to demonstrate remarkable resilience. Analysts forecast that businesses will increasingly invest in technology solutions to navigate these challenges, focusing on innovation to improve operational efficiency and customer engagement. This resilience suggests that the digital services sector could serve as a stable growth area even during turbulent economic times. 3. Analyst consensus. A notable consensus among analysts where approximately 60% forecast growth in the digital services sector by mid-2026 signals strong confidence in this market. This shared outlook reflects a collective belief in the sector's potential to thrive as organizations continue to prioritize digital solutions in their long-term strategies. The agreement among analysts adds credibility to the growth projections and underscores the importance of digital services in future economic landscapes. For whole market outlook context, the broader economic context provided by J.P. Morgan's Market Outlook 2025 illustrates the complexities that the global economy faces, including policy uncertainties and geopolitical risks. The report emphasizes that despite these challenges, the digital services sector stands out as a beacon of resilience. This holistic perspective enriches the understanding of how various economic factors interplay and affect the digital services sector, providing a nuanced view of market dynamics and growth potential. 1. The dot-com bubble 1997 to 2000. The late 1990s saw a rapid expansion of the internet and digital services, leading to a surge in investment in technology companies. Analysts at the time forecasted significant growth in the digital sector, with many predicting that the internet would revolutionize commerce and communication. This optimism led to skyrocketing stock prices for tech companies, culminating in the dot-com bubble. However, the bubble burst in 2000, leading to a sharp decline in the market and significant losses for investors. Despite the subsequent downturn, the digital services sector eventually recovered and laid the groundwork for the modern internet economy, highlighting the cyclical nature of technological growth and investment. 2. The 2008 financial crisis and subsequent recovery. The 2008 financial crisis was a major economic downturn that affected global markets, leading to widespread recession. In the aftermath, analysts began to predict a recovery driven by digital transformation and technology adoption. By 2010, various reports indicated that companies were increasing their IT spending to improve efficiency and competitiveness, particularly through cloud computing and digital services. Over the next several years, the digital sector experienced significant growth as businesses invested in technology to adapt to a changing market landscape. This period demonstrated how economic recovery could be fueled by advancements in digital services. aligning closely with current predictions of growth in this sector by mid-2026. 3. The COVID-19 pandemic 2020 present. The COVID-19 pandemic accelerated the adoption of digital services as businesses and consumers turned to online solutions for workshopping and communication. In 2021, numerous analysts predicted sustained growth in the digital services sector as remote work and e-commerce became entrenched in daily life. Reports from organizations like Gartner and J.P. Morgan highlighted the significant increases in IT spending and digital transformation initiatives undertaken by companies to adapt to the pandemic's challenges. By mid-2026, many analysts foresee continued growth as the lessons learned during the pandemic drive further investment in digital technologies and services. The pandemic exemplified how crises can act as catalysts for innovation and transformation, leading to a more resilient digital economy. The future outlook for the digital services sector is optimistic, with significant growth anticipated by mid-2026. Driven by several key factors and trends identified by leading analysts. Approximately 60% of analysts are forecasting a robust expansion in this sector, supported by strong predictions regarding IT spending and digital transformation initiatives across various industries. Key predictions for the digital services sector. 1. Increased IT spending. Analysts are pointing to a notable increase in global IT spending, projected to rise by 9.8% in 2025, according to Gartner. This surge is expected as businesses prioritize investments in technology to enhance operational efficiency and respond to shifting consumer behaviors. The growing dependence on digital platforms for business operations is paving the way for sustained demand in digital services. 2. Acceleration of digital transformation. Companies are increasingly recognizing the necessity of digital transformation to remain competitive. This trend is expected to continue, with businesses across sectors investing in digital tools and services to streamline processes, improve customer experiences, and adapt to evolving market conditions. The integration of advanced technologies such as artificial intelligence, cloud computing, and data analytics will be crucial in driving this transformation. 3. Resilience in the face of economic challenges. Despite ongoing geopolitical tensions and macroeconomic volatility, the digital services sector is projected to demonstrate resilience. As organizations face uncertainties, many are turning to digital solutions to navigate challenges and enhance their agility. This shift is expected to bolster the sector's growth as companies seek innovative ways to adapt and thrive in a complex economic landscape. 4. Sector-specific growth. Within the digital services sector, specific areas such as cybersecurity, cloud services, and e-commerce platforms are likely to see accelerated growth. The rise in cyber threats and the increasing importance of data security will drive investments in cybersecurity solutions. Similarly, the ongoing shift towards remote work and online transactions will continue to fuel demand for cloud services and e-commerce technologies. 5. Market consensus. The consensus among analysts indicates a strong belief in the growth potential of the digital services sector, with 60% forecasting positive developments by mid-2026. This shared optimism reflects an understanding of the critical role that digital services play in modern business strategies and the overall economy. Broader economic context. According to J.P. Morgan's Market Outlook 2025, the global economy is currently navigating a landscape of policy uncertainties and geopolitical risks. However, despite these challenges, certain sectors, particularly digital services, are expected to thrive. The report emphasizes that businesses will continue to invest in technology to enhance customer engagement and streamline operations, contributing to the overall growth of the digital services market. Timeline of predicted developments. 2024. Early signs of recovery and investment in digital services begin to emerge as organizations reassess their strategies in light of ongoing economic uncertainties. 2025. A marked increase in IT spending, particularly in digital transformation initiatives, is expected as businesses capitalize on new technologies to drive efficiency and innovation. 2026. By mid-2026, analysts predict that the digital services sector will have firmly established itself as a key driver of economic growth with significant contributions to employment and productivity. Conclusion: the digital services sector is on the cusp of significant growth, with analysts forecasting a 60% probability of expansion by mid-2026. The combination of increased IT spending, the urgency of digital transformation, and resilience amid economic challenges creates a favorable environment for this sector. As businesses continue to prioritize technology investments, the digital services landscape is poised for robust development, making it a critical area to watch in the coming years.